Hey traders, Raghee here. Welcome to Charts and Coffee for Thursday. Now, Thursday, we have GDP. We had it already. We'll take a look at the markets here together, but we're going into that whole Jackson Hole Symposium meeting, multi-day meeting. Friday, 10 a.m. is going to be the most important in terms of the events coming from that symposium. We've got PCE in the meanwhile. The Federal Reserve's pet inflation number, that's the one they watch. And so we've got a lot of data between GDP, PCE, and then non-farm payroll the first week of September. Lots to look at because that's what the Federal Reserve is going to be looking at to determine when they're going to begin taper, likely in November, and the pace of that taper, which is right now expected to be 15 billion per meeting. Okay, so that's where we sit. The data that we get between now and then is going to be what solidifies what we as market participants are going to discount, bake into the cake, and ultimately what the Federal Reserve is most likely to do. So we're still in that environment where good news is negative for equities, and where disappointing inflation data, disappointing jobs data, disappointing growth data is actually bullish for equities because that's going to temper what they're likely to do. So, all right, let's get to it. Great to see everybody. Yes, happy Thursday, everyone. All right, UNG and IWM. Hey there, Peter. How are you? Got that question in good and early, didn't you? Okay, I love it. All right, Peter. So here's the deal. UNG is a trade that's based on the movement in natural gas futures. So if there is a futures component that is that is going to be the reason, right? Partially, if not totally, the reason for the ETF that's based on it to move, UNG, USO, GLD, SLV, TLT, right? Qs, SPY, DIA. These are all ETFs where we're going to actually look at the futures contracts to understand where they're going. UNG and Natty Gas as well has really been trying our patience. It's not bearish. It's really neutral. And the probability, two things. One, I'll say we have plenty of time, but I don't say that to justify sitting through a losing position past its point of validity. I say we have plenty of time because, well, we do. And two, the trade is still very much valid. It's just boring. It's just stuck in a range. And the probability, again, there's no certainties in trading, but the probability is that this pause within the context of this very strong uptrend is just a pause before we move towards the next leg higher, maybe testing this Darvis area high, 1475 area on UNG. So I'm still content quite with our long position there. IWM. All right. So a lot of questions I've been getting on IWM. And I guess the one that I was getting the most was, what now? So, Peter, if you haven't already checked it out, at the Simpler YouTube, Simpler Trading YouTube channel, probably the channel that most of you are on right now. Last night's free video was about just this total synopsis of how we got into the Russell, what I paid for the IWM calls, $9, just under $9. Where they sit right now, 15.5 bucks are points. And what now? Because we're at that midpoint. We're at that middle of the range fatigue level. We're at the point of control right now. So I walked through that level. So here's the most important part of this. You must scale out. You must pay yourself while you can, not when you have to. So that's number one. Number two, move the stop to break even. Check out that video, Peter, on the IWM, or anybody else who's wondering, A, Rog, how do you trade chop? And B, how do you find targets and levels to enter at? That video walks through the entire setup. And it's, I think, the fourth video of the series that we started last week when I sent out, hey, this is on the radar, time to watch this thing. And that's the trade on the Russell. So thank you for the question, Peter. Next up, Andres, what are my thoughts on AN? AutoNation, huh? I mean, I'd prefer to buy it. That's for sure. It's consolidating within the wave. So to me, this is going to be really, it's interesting. We've had a couple setups like this throughout this year. Google did this, XLF did this, and what is this? This is having a clear path that I believe, I mean, clearly this is a path of least resistance to the upside. If we can let go the notion that every fatigue in an uptrend is the precursor to a downtrend, wrong, right? If we can let go of the fact that every sideways move in an overall bullish directional bias is the precursor to a rollover, again, from a probabilistic standpoint, and we're just playing what the most likely scenario is in any chart we're looking at. The most likely scenario, not that it won't be wrong, of course, but the most likely scenario is it's going to continue. This particular pattern is an interesting one because when I get 4 blue grab candles, I look at this as a pause. And if I have a pause within the context of what I believe is still bullish directional bias, it's one part potential momentum breakout, and it's one part really buy the wave and play the dip. So this is where dip buying and momentum breakouts sort of dovetail. And whichever way you like to trade it, it's there. So that's what I see on AN, and thanks for the questions. Hey there, Kevin, what are my thoughts on AMT? Sure. Beautiful uptrend. Great eye. You guys are y'all are picking out some very, very nice trends here. Pullback buy, yes. So the one thing that I'm omitting just because of time constraints and so forth is this. Whenever we're looking at AN or whenever we're looking at AMT, we have to step back and at some point take a look at the other symbols that are in the tide, right? This is a boat, right? So it's an individual symbol, but what is it hanging out with? And why is that so important? Because that's the only way that we can go through the relative performance process. Is this the best example of what I think this particular niche, sector, group should do? So, that's got to be a part of the process. But, omitting that for now, on its own, face value, gorgeous looking uptrend. Yes, we've segued into yellow sideways markets. But again, remember, here's a really great example. I shouldn't say really great, but it's a solid example of what I was talking about before on the rest of this question on AN, which is, when the market takes a little bit of a prolonged breather, starts moving sideways, blue grab candles, it's one part clearly by the dip, but it's also one part momentum. And that's where these two strategies can coexist for a brief period of time. So I like the buy. Dip buy is fine. Just remember the last time that we dipped, it was a pretty significant one. So keep that in mind. It's not that this market's not capable of getting down to the middle or bottom line of the wave. So that would definitely be part of the entry zone that I would build for it. So thanks for the question, Kevin. Really two great trending names to kick off our morning. I love it. Okay, Tesla. Hey there, Donald. So as far as Tesla goes, not a trend, but I don't know what I want to short this thing, especially not from where it sits right now. I don't know what I want to short it at all, to be quite frank, because it did, and this is going back to May, 1, 2, 3, accompanied with the double red shifting to yellow. So this is the completion of a trend reversal. So that alone, this event alone, not the gap up and not the large candle, but taking out this number 2 swing high, now I have much more of a bullish opinion of Tesla because of that bottoming 1, 2, 3 pattern. So that's the first thing. The second thing is it is mostly dominated by green grab candles, green, one red, right? A handful of blue, but not a lot. So I would have to say that mostly it seems a path of least resistance is moving higher, but I don't have, there's two ways that I can confirm a trend. One is a grab candle pattern confirmed with propulsion, and the other is the JT multi sitting at the bottom of my chart. I don't have either yet. So while I wouldn't call this a clean buy the dip, let me point out, remember I mentioned before, blue grab candles typically mean potential momentum breakout. Yahtzee, right in there. So I personally don't have a setup in this area. And I think the most important thing for someone on this side of the mic and in this side of the camera to say is, I don't have a setup for you, and not just make something up so I don't have to say, I don't know. I'll tell you what, I don't know. I think the path of least resistance is higher. That's all I got. Okay. So thank you, Donald, for the question. I do appreciate that. All right. Moving on to our next question, which is, hey there, David. Good morning. Thoughts on PFE? Lots of thoughts on healthcare in general. Healthcare, I never would have thought, if you asked me, Rog, of all the dips you were buying, because we know you're a dip buying fiend, of all the dips you were buying, which one did you think was going to be the big trade of summer? Who the heck knows? I didn't know. I did not ever think that my healthcare uptrend was going to be sort of the champion of trends over summer. Not for a second. I thought it was actually going to be crude. And so pleasant surprise, which kind of goes to remind us about something. I'm a huge John Mayer fan. I know he can be out there sometimes, but what a talent. And he was doing an interview for his current album, Sob Rock, which is hilarious because if you turn Sob backwards, it's 80s, right? Haha. Very meta. It's a cool album. But anyway, they were asking him about his songwriting. I mean, he is a very good songwriter apart from a guitarist. And he said something that I think applies to us in trading so much. And he said, when I sit down to write, I can't sit down and say, I'm going to write a big song full of all these, big themes and life themes. He goes, I can't write a big song. It's too much. He says, but if I try to write a song that could fit in a cup of water, all of a sudden, I realize that I've got this big song, which is to say, I can't start off with a single dip in XLV and say, oh, this is going to be the big trade. We don't know. And if I try to put on a big trade, it's likely going to humble the you-know-what out of us. So I like PFE a lot. It's been a terrific outperformer. And I know that within me, I am anxious to get back in. It's rewarded me so much. And that's why, or I should say XLV as a whole, but that's why I'm going to be cautious. So you might say, wait a minute, Rog, this has been really good to you and now you're going to be really cautious? Of course, because this thing has been rewarding me throughout the summer. And that means a lot of times think about some of your biggest losses. They're usually going to come after a pretty big win, and usually in the symbol that's been rewarding you because you just can't let it go, right? And that's what I have to acknowledge about healthcare right now. I do like the healthcare setup. PFE is pulling back to the 21 exponential, which would be the first aggro level. But much like I mentioned before, I'm going to crack open the XLV, and I've got to look at Johnson & Johnson, and I've got to look at UNH and Abbott, which actually had my eye as well. I've got to look at AbbVie, Pfizer, to your point, Medtronic, and I've got to go through all those names. This is the multi-chart scan. I'm going to go through all those names and say, okay, do I like the narrative of healthcare and how? But do I think it's in a good conservative level? What's the timing like right now? What if Powell fumbles the message 10 a.m. on Friday and we get a deeper pullback? You might say, well, healthcare should be more resilient. I agree with that. But healthcare is still belonging to this tide that is primarily the S&P, but secondarily the Dow. So the S&P and Dow roll over. As great a boat as XLV healthcare is within that tide of the indices, it's going to have to work a whole lot more wide open throttle to keep the tide from taking it back. And it probably will. So I'd say that my timing is more going to be post or with that Powell messaging on Friday. And I might choose to go broadly at the XLV level rather than pick a boat, David, because there's just so much I like within the XLV. Take a look at all the charts that are heavily weighted within it. I do like Pfizer. I love that you're looking at healthcare. I think what I'll do is say yes to Pfizer, but rather execute the idea at that tide level, at that sector XLV versus the individual stock. All right, that's just what I'm doing. But I think we're absolutely on the same page there. So good stuff. JMO asks, what potential impact will the natural gas numbers later this morning? Yes, we have inventories. Thank you. How about natty gas? It's going to be a volatility event. Inventories are almost never going to be shifts in the trend. So when I look at a trending market like natural gas, I don't suspect that inventory numbers are going to upend that trend. So if the number comes in terms of what are we looking for in inventory numbers? We get the drawdown numbers and we get build-up numbers. What does that mean? Drawdown means there's demand. Build-up means either a combination of less demand and increased supply. Well, the former is bullish. The latter is bearish. So that's all I'm looking for. But I don't think I'll be looking for anything more than a volatility event that I would see clearly on a, say, 5-minute chart. I don't think it's going to be anything that disrupts the trend. I would love for it to be, though, again, this is if that can be a catalyst to the breakout that we're waiting for. That would be great. That would be ideal. But either way, I'm not expecting anything major out of that event. So thank you for the question. And you're absolutely right. Got to keep an eye on those high impact hot zones for the commodities, right? You got to keep an eye on those events that are able to really move the market. And let's see, next up, and how are we doing on time? Oh, we're okay. Let's see. Good morning from Sonoma County. Good morning, Tim. Good morning. Good morning. Good morning, Lisa. Good morning, Jimmy. Great to see you. Twitchy. I got my eye on you, Twitchy. Twitchy's been with me forever. Twitchy's wait, she's so mean to Twitchy. Say hi to Linguini for me. Dude, say hi. Hey, give Linguini a little pat on the head, a little scratch on the head for me. That's his cat. Hey, good morning, Seamus. Thank you very much. And ditto. All right. Good morning. Good morning. Yeti. Yeah, let's take a look at Yeti. I don't have any skin in the game in Yeti. Nice looking overall market. As long as, now look at Yeti. So this is PJ, it's a cool question on a trend that we know is going to head higher, but it's probably going to be slightly nausea inducing along the way. In other words, we're going to need a pretty strong stomach to hang with the way in which Yeti seems to want to climb higher, which is just wanting to break hearts, right? Just break those hearts and then move higher. And this is not personal. This is just the way it's moving. And if you look at price action, Yeti is telling you, this is who I am. This is what I do. And when you see that, okay, Yeti, you're not going to fool me. I know that if I'm going to buy a dip, it better be a pretty deep one in terms of the zone that I want to enter at. 34 EMA on the close at most aggressive to initiate scaling into that buy. And then you say to yourself, I can buy at the bottom line of the wave too, but I am not for a second, Yeti, going to be bamboozled into thinking that you're going to stop there. No rope-a-doping me, right? That's the way you got to sometimes talk to these things. Do I talk to my trades? I do. So I know that there's the close. I know there's the low, but I know that Yeti's going to do the thing that Yeti does. And as long as we can bake that in to our risk tolerance, then stuff like this is a whole lot easier to trade. So whenever you're buying a dip, whenever you're setting up a momentum breakout, look at the last few setups that looked similar and just look at the way in which it behaved. Because if in the context of Yeti, you just accept that it's a wild one, once it gives you double green, it's going to be very volatile on pullbacks. Once you know that, and you would have known that by when? The May 12 was the lesson. The May 12 pullback was what taught you that. And then that means every subsequent pullback since 1, 2, 3, 4, and now 5 I'd say this one would have been tough, but I'd say 4 out of 5 were very buyable dips if you calibrated to what Yeti tends to do. Not what we want to see it do, but what and who it is, right? I hope that makes sense, PJ. And I think that's a really good conversation about, look, some trends are not pretty. Doesn't mean they're untradeable. It just means we have to accept that not all trends are just going to roll along, surf the wave and stay with blue and green. Some of them are really going to make you reach for the Dramamine. And if you can just kind of remember the personality, you're right as rain. So I hope that makes sense. And just like that, I am out of time. I don't believe, and let me just really mention, I don't believe, Christopher, that the crude oil market's in a bearish daily trend. Not that I don't believe it. I don't have that as confirmation in my tools. It's neutral, right? Am I saying that we're in chop? Not in the S&P and in the NASDAQ. And we are, Charles, chop on the Russell and borderline ugly uptrend in the Dow. So we have to get very specific about the indices and their current market conditions. Okay. So thank you as always for all the questions. That is fantastic. Do I have a target on crude? I was thinking about that, Andres. And yes, if you take a look at CL, actually, here it is. See where the 50 level is? That's cutting the current chop in half. Yeah, I mean, 68 is going to be an upside obstacle. This is no different, by the way, than the way that I walked you all through the Russell in the videos that I've been doing at the Simpler Trading YouTube channel. Check those out. I'll see you in the next episode of Charts and Coffee. As always, thanks for being here. Be good to each other. I'll see you tomorrow.